Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. Third IMF review before year end. Colombo Bourse trending towards an all-time high. And tourist arrivals reach 1.6 million. In our top story this week, the Central Bank of Sri Lanka confirmed that the third review by the IMF will be delayed. Although a timeline was not given, Dr. Nandalal Veerasinghe, Central Bank Governor, said that the review will be done before the end of the year. The delay follows a recent visit by a Sri Lankan delegation to Washington aimed at finalizing a debt exchange with bondholders. Early in September, Sri Lanka finalized a draft agreement with its bondholders to restructure external debt worth $12.5 billion by issuing new bonds for existing bonds with a baseline haircut of 28%. The IMF has now acknowledged that the next major step for the country is to reach a formal agreement, thereby completing debt restructuring efforts. So far, the IMF has disbursed around $1 billion out of the $2.9 billion extended fund facility entered into last year. On a related note, the central bank governor also iterated that following the debt restructure, Sri Lanka is likely to come out of the default status, which the country entered into in 2022 following a hard-hit economic crisis. The nation is currently on track to recovery, with the World Bank expecting a significant 4.4% growth this year. The oil share price index at the Colombo Stock Exchange continued its bullish trend into the sixth consecutive week following the presidential elections in September, gaining nearly 1,650 points. The index is now at its highest level in the year and moving towards the all-time high of 13,590 recorded in January 2022. On Wednesday, turnover reached an 8-month high, crossing the 7 billion rupee mark. Current bullish trend is mainly driven by banks, which have garnered both local and foreign interest following the broad completion of the external debt restructuring efforts. Currently, Sri Lanka's stock market ranks at the fourth best performing bourse in Asia, just behind China, Taiwan and Pakistan. Merchandise exports in September fell 3.5% from a year earlier to $937 million. In the month, apparel exports rose 15.7% to $418 million, although tea and rubber exports fell from a year earlier. Exports to the United States, Sri Lanka's single largest export destination, rose 21.6% from a year earlier to $245 million, while trade to the European Union rose marginally to $216 million. Services exports expanded by 6% from a year earlier to $330 million. On that note, the Export Development Board of Sri Lanka has said that it plans to increase service sector revenues to $5 billion by 2030. Meanwhile, Sri Lanka is to apply for a trade agreement with Indonesia, allowing access to fabric and raw materials needed for the country's garment production. The initiative will allow the two countries to utilize interregional agglomeration provisions, enabling fabric sourced from Indonesia to be used in Sri Lanka's garment production for exports to the UK under preferential trade terms. Sri Lanka's key inflation rate continued to be deflationary in October as well, falling 0.8% from a year earlier. Food prices rose 1% in the month, while prices for non-food items fell 1.6%. According to the Central Bank of Sri Lanka, inflation is expected to be below 5% for the coming few quarters. Krrish Transworks Colombo Limited, the developer of the $650 million mixed-use Krrish Square project, has submitted a proposal that involves a Chinese contractor taking over the project. This development follows multiple creditors taking the company to court with the intention of winding it up. This project, upon completion, would have been the 10th tallest structure in the world, boasting a residential complex managed by JW Marriott. In our weekly tourism update, in the first 27 days of October, over 117,000 tourists arrived in the country, bringing the year-to-date total to over 1.6 million. Daily arrivals continue to trend lower, although rising to 4,338 in the month, up from the 4,071 recorded in September. India continues to be the primary source market, followed by the United Kingdom and Germany. At the Treasury bill auction held on Tuesday, yields on 91 and 182-day maturities rose marginally from a week earlier. Bids amounting to 297 billion rupees were received, of which 145 billion were accepted. The Sri Lankan rupee remained stable against the dollar for the second consecutive week, with the central bank's indicative mid-spot rate ranging around 293 to 294 rupees. So far this year, the rupee has appreciated over 9.5% against the dollar. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on business and economic developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.